Hi guys, I'm here with another video today. This weekend I try to drop a lot of content so that new traders and intermediate traders can actually begin to find some kind of footings in the market. So without wasting much of your time, first of all, before I start this video, I want to say that this is not trading advice. I am um, this is not a trading advice. This is only educational content. It's meant for only educational purposes only. That's a quick disclaimer from me. So it's your boy, Nice Henry, and today I want to take you through the concept, the core of my trading strategy. The core of my trading strategy is what we call the pump and dump. The pump and dump. And today we're going to be talking about pump and dump and peak formations. So, I know that some of you have a variety of strategy that you trade. Whatever strategy that you trade, I want to tell you that the pump and dump, the Wyckoff schematics, is one playbook setup that always occur in the market every single day. So if you want to be a successful trader, if you want to be a successful trader, you want to take this seriously. You want to take a closer look at the Wyckoff schematics or the pump and dump. So, what is pump and dump? It is a process where the market is being pumped, sometimes in one, two, or three stages. The market pumps in three pushes and then it dumps. So, we call it the markup phase, the accumulation phase where they accumulate orders, the markup, which is when the price begin to trend in the up or in the downward directions, and then it trends until a lot of people begin to jump into the market, and then the market begin to consolidate, and the next thing it crashes immediately. So that is what we're going to be talking about today, and I want to be able to explain it in a language that everybody can understand. So I want you to pay close attention as I'm going to walk you through the step one by one. Please make sure you subscribe to my channel. Make sure you like this video. Make sure you share this video. So let's go. This is a classical pump and dump phase 1. Phase 1 is the markup phase. First of all, accumulate the prices. The prices go from accumulation of prices, a consolidation, and then the markets begin to mark up phase 1, and then it begins to trend. Phase 1 is the markup phase when the price begins to trend. You see the higher high, pullback, impulse retracement, and then it gets to a peak. The phase 2, that is where you get the peak formation. Price begin to consolidate around the phase 2, and then it crashes. Now, how you know a pump and dump? Most times the speed with which price goes back to origin from where the move began from is faster. It is more stronger than the markup phase. That's the crash phase, the stage 3. So you want to pay attention to this because it happens every day in the market, and then I'm going to walk you through the chart right away. It's as simple as this: pump and dump. This is Wyckoff schematics simplified. Pump and dump. The market maker begins to pump the market after they have bought their own orders. They have accumulated a lot of orders because they need the sellers. It's a market. You need equal amount of buyers and sellers for the market to be in a state of balance. The moment you have more buyers, the market begins to trend in a particular direction. When the market is selling, it means that you have more sellers in the market. So what I'm trying to say here is that the market begins to pump after they have accumulated a lot of orders. They begin to pump because the higher prices. But then remember, they have already bought somewhere here. They have bought at a good price. You that is coming, they are You that is jumping into the trend, maybe when you get a retracement, you have bought at a higher price. You buying here, you're buying at a higher price. Then the market continues to trend. Then a lot of people are beginning to see that the move have already started. Oh, the move has started. The move has started. Wow, it has momentum. A lot of people are jumping in. Sometimes it can even pull back a little bit again. A lot of people jump into the market, and then the trend continues. And then all of a sudden, the trend is no longer moving anymore. What you see now is the kind of accumulation, and you are thinking maybe this is another pullback, and then the market is going to go up. But you're surprised that the next thing that happens to the market is that the market crashes and puts you in a negative drawdown or hit your stops. So let's go to the charts quickly. I don't want to waste time. This is my chart. I'm going to start from this. This is a good 4-hour chart. You can see what's happening here. What we're talking about is the pump and dump. I want to be able to show you. I want to be able to show you this. Do you see that the market was accumulating here, was consolidating here, and then it started to push up. Then we have a higher high, impulse and retracement. Impulse and retracement. Impulse again. And then the market is consolidating, consolidating, consolidating. And then you're thinking, hoping that, okay, because you have learned that when you break a support, it's going to retest the support and then you're going to continue higher. So you think that this is a break and retest, right? But what happens? The market act like it's going to continue upwards and then it crashes below. Now watch the momentum with which price is going down. You see the momentum, the speed with which price is going down here, hitting all the stops. All this place is where the money is. The money is here. The money is here. The money is here. The money is here. And remember, a lot of traders have gone into this market. They have bought into this market. They want to continue the uptrend. A lot of traders want to continue the uptrend. They believe they are buying low here in order to continue the uptrend. They don't know they are buying the peak. This is the peak formation. This is the peak. This is your peak. This is the peak. This is the peak we're talking about. This is the peak. This is the peak. They don't know that they're buying the peak. This is the peak they're buying. Look at it. This box is a peak. That is why you get the consolidation and then the market drops, crashes. Now look at when the market is going up, it's giving you a higher high, higher high. Three pushes. Three pushes. 1, 2, 3. It goes into peak formation. And then when it crash, 2 momentum candle. And that's it. Hitting all the stops here. Plus the people that have been trapped here in a negative drawdown, they are forced to close their positions. This is what we call pump and dump. If you don't understand how this works, you are going to be a victim of the market makers' tricks every single day. And you know the good thing about this is that it happens on every time frame. It happens on the 4 hours, on the daily, on the 1 hour, on the 15 minutes, on the 5 minutes. Price is fractal. Price is fractal. Price is fractal. Look at this. I want to scale it down to the lower time frame. Let's go down to the 15 minutes and I'm going to show you the pump and dump. I'm going to show you the pump and dump. I'm going to show you the pump and dump. On the 15 minutes chart, I'm trying to get a good. It happens in different forms. You don't even know. This is a 15 minutes chart. This is the basics of our trading. The market accumulated around here and then it starts. Here the banks, the big boys are accumulating their orders. They are buying low. They want to get a good price, because if they fill in on all their prices, it's going to make price to skyrocket. So what they do is they keep the price in consolidating, and then they're taking your sell order to buy, because you need a buy sellers to be able to buy, because they cannot put in the whole order at once. If they fill in the whole order at once, price is going to skyrocket. It's going to go, and they're going to be buying at a higher price. They want to buy low and sell high. That's the business. So when the price starts to mark up, that they have accumulated a good positions, and price is going up. One, higher high, higher low, higher high, higher low, higher high, higher low, right? Higher high, what? Consolidation. This is your peak formation. What next? It, it broke there, because this point, most times you are hoping that it's going to continue up. We are in an uptrend, and then what happens with two momentum candle? It hits all the stops. Remember, a lot of traders bought at this price, believing that the price is going to continue up. Now they have hit all the stops here. They 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 keep hitting the stop loss of the traders. That's why you don't make money. Now again, they begin to pump the price up, up and up and up and up. Look at how long it take them to pump the price up. Look at how long. They have been pumping the price from here. They have been pumping price. It's pumping up, because it comes in different variation you cannot recognize. That's what they're doing to you. So at this point, you have your peak formation somewhere here. From here up, this is your peak formation. This is a higher time frame peak formation. But when they want to dump, boom, once. It dump immediately. They have trapped volume on this point. Now they have hit all the stops here, plus a lot of traders are trapped inside this peak. A lot of traders are trapped inside the peak. And look at how price crashed down immediately. Look at the momentum with which price crashed down. It happens over and over and over again in the market every single day. It happened on the 5 minutes, happened on the 1 minute, happened on the 15 minutes. You need to have the eyes to spot what's happening in the market. If you have the idea, you can catch almost every move, just like me. See the charts. I get almost every move they make every day. Like, I understand their footprint. Every day I get the moves. Every move they make, I get it. Look at the move. They pump the market. Look how they pump the market up. Pumping the market up to this point, and the peak, boom, 2 candlestick. They have hit the stops of all the people who bought around this place. Look at, they have hit the stops and all the way down, and the move went back. Immediately they hit all the stops. It started again. The same process over and over again. Look at it. It continue again. It continue again. And then when they start to do it, peak formation, boom. When they try to dump the market, I am there to dump it with them. I catch that move there. Look at it again. Higher high, pump and dump. Everybody who bought around here, all the swing points, that's their target. The swing point is their target. So if you want to trade like a pro, you need to understand the game they are playing. We don't buy because the market is going up. We trade a setup, an identifiable setup. See this one? I was able to catch this move. Pump and dump, and I was there to catch the move. And then this thing keeps happening every day. Look at this. Pump and dump. You can actually be a profitable trader if you understand how the market maker works, how they move the market, why they move the market. You can be a professional trader. I'm telling you the truth. It is easy to do if you understand. Look at this. Pump and dump. Look at it. Pump, peak formation. It happens on every time frame. Big, small time frame. Sometimes it happens on every time frame. And you're going to be the good thing is you can learn how to spot these moves. When it begins, you know it happens every day, on every time frame, on every time frame. I'm telling you, it happens on the higher time frame, it happens on the lower time frame, everywhere. So I want you to start paying attention to the peak formations, to the pump and dump setups that happen in the market. Professional traders don't trade strategy, they don't trade the trend, they don't chase price, they don't chase the trend. What they do is to look for identifiable setups that repeats itself. That is when you are sure, okay, I know this market, whenever this happens, this will happen. That is how you want to trade, from a position of strength. You don't want to be able to predict. Whenever I find myself in a situation where I'm not sure of what's happening in the market, what I want to do is to stay away from the market. I only trade from a position of strength, and I'm going to show you how you can scale this down to the slower time frame to catch all the moves. All the moves, I catch almost every major move on every currency pair. At least one major move on every currency pair, every day, every trading day. I'm able to get that every trading day. I get one or two moves that gives me 50, 70, 100 pips, minimum 40, 50 pips. If you can be consistently able to catch a move like that, you're going to be a profitable trader. I'm telling you, you're going to be a profitable trader. So I want you to go back on your charts, study these things, look at these things, how they happen in the market, and then you want to pay attention. Look at this one. It comes in different variation. Look at this one. It took them a lot of time, weeks. They consolidate weeks, and inside the peak, listen, look at the interesting part of it. Inside the peak, this is the peak. This is the peak, right? This is the peak formation, because this is the peak formation. Now, this is a complex one. Inside the peak, they are still doing the pump and dump. Look at here on the 15 minutes. Let's zoom in. Look at this. Look at this. This is pump and dump. Higher high, higher high, higher high, peak formation, dump back to where we started from. Look at this one. Lower high, lower low, lower high, lower high, lower low, lower high, lower low, peak formation. This is your peak formation. What happened next? Price goes back to where it started from. Then higher high, higher low, higher high, higher low. You have the M pattern, peak formation. This is a small one. Dump. You get a 15. You get a 40 to 50 pips on that one. What happened next? It keep happening. Look at this one. Peak formation on this one. It give you a nice 20 to 30 pips. Look at this one. Peak formation here, and it dumps. Look at this one. Peak formation, boom, and we're up. Look at this one. Now, do you understand the moves? Do you understand the secrets of what is happening in the market? I'm telling you the truth. You want to pay attention to this. If you know what you're doing in the market, it's not so difficult for you to catch these pips. It is very easy to catch the pips. It is easy for you to understand what they're doing to you, how they set the traps for the retail traders to fall in there and lose their money. If you know what they're doing. Okay, look, within the weeks of consolidation, almost every day, you catch a move. Look at this one. Peak formation, dump. Pump and dump is happening over and over and over again. It happened over and over and over again. Look at this. It's happening everywhere. I'm telling you the truth. This even is a pump and dump. This is a peak formation. You can get a nice 40, a nice 100 pips on this one, a nice 100 pips on this one, because these things keep happening. Look at this. That's the pump and dump. Look at it. Peak formation, consolidation, a breakout, and boom, back to origin where the move started from. Very easy. I simplify the trading. I simplify the trading. I have simplified the trading. You target the high from where it started from. You can catch a nice. If you're a day trader, this is the best strategy for you. If you're a day trader and you don't know how to trade the pump and dump, you don't know how to trade, trust me, you've not really started. This is one thing you want to pay attention to. Look at, very easy. You catch the pips easily. This one's a bit tricky, but if you know what you're doing, you can actually get your peak formation from here, and then you target this. You can take first profit here, and then you take a second profit here. Everything in the market is measured. There is no coincidence. Everything is a measured move. Imagine how many pips you can get on this single trade. Everything on the market is a measured move. There is no coincidence in the market. Look at it. Pump and dump happening over and over again. Peak formation. The market have been, look at it, higher high. Look at the squeeze, the tight squeeze, and immediately it peaks here. What happened? It gives you an M pattern and a pullback. You get that entry, boom, it clear all the stops around this point. Look at the stops. You know how many millions of dollars around all this point? That's where the money is. What they do is to attack the price. They attack price. They attack the price. They do it over and over again. They fool you. They attack the price. They are attacking the swing point, your stop loss. That's what they want. The retail traders are foolish. They want to go and make money in the market. The market maker is trying to make money from you. They want you to trick you into buying when they sell. They trick you into selling when they buy. That's the secret. If you want to learn more about my strategy, join our free Telegram group where you can learn more about how to trade like a professional trader, where you can see the tactics, the game of the market maker, and then you can actually make money every day from the market. I want to see you on our free Telegram group channel. That's where you can join Millionaires FX. I'll see you right there. Can teach you more on how to become a professional trader. See you on the next one. Have a nice day. Have a nice weekend. I'll see you on the next video. Bye bye. Peace.